Yo, what's up, guys? Yeah, um, yeah. This is Pedro. This is another trading lesson that we're about to cover up. Today, we are going to work on or study what we call liquidity. Um, Something that I really can't wait to let you guys know, right? And liquidity is a whole lot of aspects that I need to cover for you guys. So kindly stay tuned and kindly watch to the end, right? Just watch it and try to pick something out of it. I'm sure this will really help you a lot. Okay. So so what is liquidity, right? And I know I always give credit to Redeems. I learned this from ICT Michael, inner circle trader. That is the name, right? He calls it ICT. Other people have names for it, but he calls it liquidity. Okay, other people have names for it, but that is how he calls it, and that is what I also call it. Right? Right. So liquidity speaks for itself. Price trying to liquidate an area, right? That is price running through an area. Okay, so that is what liquidity is, and you need to know what or which liquidity is qualified for a trade, or which what liquidity is all about. You need to know which one is the liquidity that price is heading towards, right? And it helps you confirm your order block direction, right? So I'll leave a link below for my previous video, which will talk about order blocks, because liquidity, as I'm talking about it right now, moves with order blocks, right? So if you know order blocks, market flow, you know liquidity, right? They all work together, right? So let me just draw something mysterious here, and then we go straight to the chart. I wouldn't waste much time here, right? It's all about price, you know, coming down. Okay, when price is coming down, it leaves spaces behind if it will go up, right? Now, we see that this is the last low. If you draw a line, and this is the last high, there's a space in this area. The same way we have a last low. If you draw a line, there's a last line. There's a space in here, right? But at a point, that price just drops, goes up, drops, goes up. This area and this area meeting, there's a chance price goes down for a very long time, right? So what they do is that they leave these liquidities for future push to the opposite direction, right? And they use these same areas to fake out their directions, right? Price can give you a drop, go up, then go lower, go up, comes lower, and price will go up, right? Making you think it is what, going all the way up, and you enter a buy at this area. Okay, as soon as you enter a buy, price will just go up a little bit and then start dropping. Okay, and you'll be wondering how, and you'll be telling yourself that your broker that was what I used to think earlier on. My broker has told the market makers that I've entered the trade, we should sell it downwards. Okay, they should start selling, and that is not it. They have a pattern they use, and you should know and you should understand why. Right. So I'll not talk much here because here is full of lines. Now let's go to the chart and let's look at what's really happening. Liquidity and how to trade them. All right, so we go straight to the chart. Now this is gold, right? Now if you look at gold right now, price has a way of running through it. Let me zoom out and let's see how it looks like. Okay, let me even go into monthly to make it look easier. if I even get a chart like that. Okay, let's see. All right, I'm just taking gold for today. If I feel like adding another chart, I will. Now look at this area. Price giving its bullish bearish candles, blah blah blah, going up and down. Okay, this is the last low. Okay, now I spoke about liquidity. Let me start with the first type of liquidity, wicks. The first type of liquidity is wicks, and if you don't know what wicks are, I'll talk about it again. I'll not talk about it further, but I have a full video on wicks or candlesticks charts, the parts of a candlesticks in my previous video. So go into my channel, you will see it, and also subscribe for more videos for you to understand. Now wicks, right? Liquidity or wicks. Now let's ask ourselves, what attracts price is wicks. When price have something like this, equal wicks, almost equal in an area, price will always love to run into it, right? Now you could see we have almost equal wicks. Okay, this is a monthly chart. I could see how long it took price to come all the way down and take that wick out. So how will you know which wick price is going to take? Price, let's assume price is at this area. Okay, how will you know the price will come here or here? Because these places are all what? Equal highs and equal lows. They are what? Wicks scattered around here. It's too clean for the market, but it's only the market who can decide where it's going. And anytime they're about to move, they give you a sign, and that is what you always need to learn about, right? So if you don't know how to trade at all, just learn about other blocks and look for wicks, equal highs where the wicks are. When you see things like this, it means market to run into them. You have equal wicks. Market did what? It ran into them down here. That is how the market travels. They look for those things, equal wicks. They run into it. All right. That is how market trades, or that is how the market moves. All right. So, looking at equal wicks, you have to ask yourself, how will I know the price is about to go down or price will take it out? So you have to look for other blocks. Okay, sometimes it will not be clearer in that same time frame, right? Like at this time frame we have this equal wicks, and over here there's no sign of a sell. Okay, and as you know, in our trading strategy, this last bearish candle is the sign for price doing what? Bearish. If price closes below it, we are bearish, and it took this long candle to close down here. So you even be scared to be in such a trade, or if the retracement would have come a bit higher, would have been good for you to enter a trade here. Okay, so they don't make things cool for you. So at this area, this breakout here, you only get the retracement in a smaller time frame. All right, in a smaller time frame. So that is when you will know that since price is taken out this week, it will continue what? Dropping. You ask yourself, why should it continue dropping? You look for gaps, and you could see this last bearish candle and this last bullish, the top here and the low here. You can see there's a gap in between. If you look at this bearish candle and this bearish candles open at the top over here, there's a space here. Okay, here also you could see down here and over here there's a space here. Okay, but you could see price has left it hanging. It will definitely come to clarity in future. You don't know when, but we will see it when it gives us that signal. Because you could see over here that from this low to this low, we have a equal low, right? So we are waiting for when price will come to that level. When it comes here, it has respected here. Any time in future that price comes to that area, it will give us a sign. Then we know, oh, okay, this is a huge M. You could see for yourself right now. You could have something like a huge M or something. So liquidity on wicks, that is one type of liquidity, right? The wicks, that is what attracts price. Price always like to run over those areas, but you only need the order blocks with a direction to that area. That is when you enter such trades. Good. So that's liquidity for wicks. Let me type it down here. Wicks. Now the next liquidity is fair value gaps. Fair value gaps. Fair value gaps. Sorry. What is for that word gap? Okay, so fair value gaps. Now, how do we identify those gaps? As I said earlier on for the drops, you could see the space between this last swing low. Okay, you see this is a swing low, a bearish and a bullish candle closing at the low. This is a swing low, all right, and a swing high, fine. And from here, price dropped all the way down. The last swing high is here, and mostly the swing highs and swing lows, they normally meet before price moves again. Not all the time, but mostly. So at this moment, this gap and this gap, this area has to be traded by price, and you can see for yourself. If I use my trend line, I draw a line from here, this low, you could see price traveled there. You could see it for yourself. Price traveled into it. Get it? It traveled into it nicely. That is the second liquidity that you should always look at. The gaps. The gaps between a swing high and a swing low. Not just an empty gap. I'm talking about a place with only bullish candles or bearish candles. This place you have only bearish candles. You could see from here the last bearish candle is this one, the last bearish candle is this one. So this bullish candles free gap over here, price would like to fill it, right? You could see over here as well, the gap is in this last area and this last area. There's a gap here. Price would like to do what? Fill it. So whilst your price gives you a direction, you look for those empty gaps and you try to take your profit at those areas. So for example, if you take these guys for instance, right, you have a buy scenario, especially price breaking out of your highs over here, all of these areas, where's my price taking out this whole area, giving you a buy in a smaller time frame. Even here, you could even get a breakout from here, right? Just here, giving you a bullish triangle. All right, so with your buy, your TP calculator alone has confirmed where price is going from here to here. Has confirmed where price is going. So if you put it here, price is going up. What happens? You also ask yourself, how possible is price going up there? Then you look for other factors. There you could realize that you have empty gap at your left hand side. That is a full bearish candles over here. Price would like to run through it, and that is what happens. So you can put your profit right below this bullish candle, and your TP would have been hit. All right. So this is the second reason, or the second factors that attract price. And if you learn about it, I think it's also going to open your eyes to what they really do. So you could see that in most moves over here, price will fake out so many times, and people will start seeing price to be in a bearish scenario. You're looking at this area, yeah, we think price will sell even at this area. Okay, you think price will sell. Why should price sell when it has equal candles at the top here? All you need to do is to look at that same area, this same area in a smaller time frame. You get a change in direction, other block type 2 and type 1 in this area. So if you get it here, you buy, and your target is going to be these equal highs, and price will run through them. You get it? So this is equal highs, wicks, right? These are areas that price will run through. The next area are the clean areas, the bullish and the bearish candles that has no bullish, let's say bullish and bearish candles that are so too perfect, so clean. There's no swings in them. Okay, price will like to run through them. So that is what you should look at. Now the next area you look at is swing highs. Okay, when price is bullish, it is going to take out when prices bearish swing highs. Okay, let me explain it further. When price is bearish, price is selling, gives you swing high, that is lower highs. Okay, lower highs. So when price is going to be bullish, it start taking out the lower highs, then start giving you higher highs. Okay, here are equal highs, so but at least from here we have higher high, higher high, higher high, and higher high. You get it? So yeah, when it's coming down, it start giving you lower highs, lower highs, lower highs, lower highs. You get higher highs inclusive. So when it's going back up, it has to take out all of them. That is what it does. That is what it does all the time. So you keep that in mind. Now let me go into a smaller time frame and let's see if what I'm saying is what it really work on. Starting from somewhere. Alright, so assuming even here you have wick and wick. Okay, price has done everything it's trying to do. Now price have given you a push and a retracement. Alright, now in this area, the whole of this area, you have to go into a certain time frame to see what it's really trying to do. If you like, just look at this last bearish candle. Price broke it. Price came to do what? Respect it. It came down, couldn't go below this last bearish candle, and this bullish candle came to do what? Buy. Now you can see this becomes a swing high, a high, and then this becomes a higher high. This tells you that price has changed direction. So your buy starts from here. You could see the way price came back down, taking out this low. All you need to see is that price should not take out this last bearish candle. So if you put your buy here, price comes down, your low here should be able to hold price. And you should know that price will never leave this equal highs hanging or leave it there. So if you have, that's why money management is very important. So with this, your stop loss is mostly down here, and price did what? Went up to clear this whole high. That is what? Liquidity, equal highs, price taking it out. You leave it, you're out of a trade. If this is how you trade, that is cool. Now you stay away from price, allowing price to keep playing what games, right? So now price comes low, create equal low, price wicks. Okay, this is another type of liquidity. Price leaving a wick hanging, a single wick hanging. It's another type of liquidity, right? Now you look at time frame that could help you get it right. in this area, you definitely get a turn in market direction here, and definitely price will definitely take out a wick. And you could see from here, okay, from here, price taking out the wick. So if you look at these things and always trade towards them, wicks, equal highs, trade towards those areas. Okay, those are the areas that price travels with. So where are we now? If you look at this wick as well, price is still what? Bullish, right? You always need confirmations. You need the order blocks giving you a bearish order block telling you we are bullish. Now this is the last swing high, order block type 2, price runs through it, price comes back to respect it, and price booms up with it. Okay, order block. So just learn about these things, and it makes it easier for you to read price. Gap value, you see fair value gap, price filling these gaps. No, let me see if, yeah, filling the gaps. You see this whole space has been confirmed. Price has done what? Fill the gaps, right? So we have a sell in this area. There's a change in market direction in a smaller time frame here. That's why price went up and retraced here. If you didn't see it, and if you don't trust it, then you wait until price takes out this high, swing high, and we have a higher high, retracing it, and you buy up. And since you have this, you should know price will clear it all out. Secondly, whilst price changes direction here, you should know that you have liquidity taken out though, but they are still in the same area. So it will definitely take it out completely, and that is what it did, taking the whole of these voltages out. That is what it did with this buy. So if you understand price, you know what it's doing. Okay, I'll not talk much. I think I've spoken a lot about all of them, the gaps, the highs, and everything. Now if you look at what price is doing now, you could see this wick. So there could be a chance price coming down to it. Now you look at other blocks. Okay, you look at other blocks, you look at down here, this whole gap, price would like to do what? Fill the gaps. You only look at the candles. Okay, so far our candles are still what? Bearish. Okay, we have swing high and swing high. Okay, so there's no swing high which is higher high. We still have lower highs, so we can still be expecting price to be what? To be bearish. Okay, so if you can't see it clearly, you just go into a smaller time frame. You can see right now we have wicks here, which is full of noise down there. All right, so if you are not clear about the area right now, you just go into a daily, you are in weekly, by then come into daily to see, and you could see that still we are still what? Bearish. We still have lower highs, see, and we have clean, wicks here and here and wicks here. All right, this two alone look almost equal, and if price is able to come to take it out, price would like to take this one also out and also do what? Fill the gap. This gap out here, would like to fill the gap. If the price fills it, then you are out and you wait for price to give you a next move. Right, so this is how trading is all about. This is what trading is all about. You only need to train our eyes to see it. So this is liquidity, and this is what confirms your order block where price is going. I believe you've gotten something today. So this is what liquidity is all about. Liquidity is always the areas price would like to run through, price gets attracted to. Those are the areas you always have to look at. Thank you, and I hope this really helped and added to your trading skills and knowledge, and I hope it really helps you. Thanks a lot. Enjoy your day and enjoy your day. And I'm out. Right.